Hi, I'm Tom Bradford. So in the last video, I talked about citizenship by investment in Cyprus, and the 60-day rule for tax purposes is the subject of this video. So if you're investing in Cyprus to secure citizenship by investment, then there are certain taxes you can't avoid, and there are certain taxes you can avoid under the program that was set up by the Cyprus government to attract foreign direct investment. And the key to it is, if you are a tax resident in Cyprus but not domiciled there, then you'll pay no tax on dividend income to you, which means that you can structure your affairs such that you pay little or no taxes. And this was set up to help foreign investors who are considering Cyprus as a destination. Now, just to go back to the investment and the taxes that you can't avoid, first of all, there's certain taxable events which are likely to take place. So firstly, you're investing the 2 million minimum investment in property, and that's usually distributed between 500,000, which would go into residential property, and then 1.5 million euros, which would go into rental properties. Now, the rental properties would, or have at least in recent years, attracted between 4 and 6% rental income per year. So that is taxable, and that's essentially income tax, and there's a number of bands that apply, and I've just set them out in detail in a blog post that I've just completed, in which I'm give you a snapshot of here. But essentially, that could be up to 90,000 euros just on your rental income per annum. That again can't be avoided. It would be received under that would be taxed under the income tax regime. And the second and perhaps most important element is when you come to your exit, which you're entitled to exit from your investment and sell your investment at year 5 of 1.5 million, but you've got to maintain the 500,000 euro investment for life. But when you sell your rental properties, if they are rental properties, then if they have increased in value, then you'd be taxed under the local capital gains regime there. And again, that's subject to an exemption of 17.5 thousand, which I've talked about in my blog piece here, but 17,000 euros. But if there has been a significant increase in the property price, then that would be taxed. Now, that's the bad news, but getting on to the good news, if you are considering citizenship by investment in Cyprus, you should consider becoming tax resident but non-domiciled. And what that would involve is being in Cyprus for 60 days, at least 60 days per year, number one. Number two, not being tax resident in any other jurisdiction, so there's some residency planning that goes with that. And thirdly, having a company in Cyprus. Now, if you meet those criteria, you can become tax resident but not domiciled, and then receive your dividend income tax-free, whether it's from your overseas company or from your company in Cyprus. So I think that's the key thing that you should consider. I'm just checking whether there's any other points that I wanted to cover here. I'm going to be producing some more videos just on how this works, and in particular, and I think what's of particular interest about the Cyprus regime is the fact that you can bring your dependent children up to 28, and also your parents, which is unique. And there's it's a pathway to citizenship, both for you and them, after 6 months. And the key message, which I put across in yesterday's video, or the key update, is that the Cypriot regime is now processing these applications within 6 months, and is clearing the backlog by May. So that means that if you secured Cypriot citizenship, then you'd have EU citizenship, and if by the end of the year, so if you apply now, you'd have citizenship by October, and then if by the end of the year you then came to the UK, then you'd be coming to the UK as an EU citizen, and you could then apply for pre-settled status, and then have settled status after 5 years in the UK, because remember, you don't have to be resident in Cyprus. Again, you only need to spend 60 days there to take advantage of their tax regime, and you can then secure British citizenship at year 6, and then have a British passport. And then if you were considering whether to move your company to Europe, then you'd have to consider, well, should it be in Cyprus or in the UK? And the corporation tax rate in Cyprus certainly is significantly lower at 12.5%. But many of my clients want to have a company in the UK for other reasons, whether they be sort of prestige based or for, maybe other good practical reasons for having a company in the UK. So in short, there's this limited opportunity, limited window of time to secure Cypriot citizenship, EU citizenship, which again is separate and additional to your member state citizenship, and then British citizenship. That will not be possible in a few months. In a few months' time, because we'll be too close then to the end of the transition period when the UK is exiting the EU. So I hope that's helpful, and I will see you in the next video. Bye for now.